Well, a major market milestone. The Dow Jones Industrial Average closing above the 20,000 mark for the first time ever yesterday. Bank stocks have been a big beneficiary of the rally. Do they have more room to run? I want to bring in Bove, top analyst in the space, equity research analyst at Rafferty Capital Markets. Dick, good to see you, sir. Thanks so much for joining us.
Thank you, Maria.
Your take on this milestone. Give me your take on the broader markets and then how financials fit into it.
Well, I think that if you buy into the Trump economic program, which I do buy into, then you can see, a tremendous amount of activity in the business sector based upon any number of these executive offices, the orders that were put out. And banks are, the key beneficiary, because let's assume it's going to cost $18 billion to build a wall. Someone's got to fund the suppliers who are going to be putting up that wall. Let's assume that NAFTA and TPP are going to be adjusted, traded, or gone. Then, there's going to be manufacturing activity in the United States, which will require a lot of bank, if you will, private capital funding to build the manufacturing plants, to fund the inventories. Let's assume that there's going to be some sort of fiscal stimulus. If there's going to be fiscal stimulus, someone's got to fund the builders of the roads, the tunnels, the bridges, etc. And that's the banks. In addition to the banks, it's the capital market companies like Goldman Sachs and Morgan Stanley that raise funds in the open market. So it's a bonanza. It's a literal bonanza for the banking industry, because you're going to be increasing loans at a faster rate than we've seen for decades. And that means that these stocks, can continue to be bought.
This is an incredibly new layer that you're putting on to the good news for the banks. We've all been talking about the rollback in regulation and a 15% corporate tax rate, lifting earnings to the tune of 20% or something in 17. What you're bringing into the conversation is these new projects that are sure to come because of the infrastructure plan, and somebody's got to fund them. That hasn't been talked about, Dagan.
Right, and just the general economic environment. If an economy is being lifted, then that will lift the business of the banking industry. And Dick, I'm wondering just the headline risk if it goes away, because it's just been a giant dark cloud over the entire financial industry over the last 8 years. Does that help?
Well, basically, I think it has to be economic growth and the creation of loans, because essentially I don't see the regulation being cut in the banking industry. I don't think the Republicans want to get rid of it. I don't think the Democrats want to get rid of Dodd-Frank. I think they're going to tinker around the edges, get rid of maybe the Volcker rule, maybe give credit unions more power. But the fact is that the big banks are not going to see any easing in regulations. The second thing is, I don't think that the increase in interest rates is as beneficial as everybody claims it is, because it does more harm to bank balance sheets than it does to help bank income statements. So it's got to be economic growth, more loans. That's going to happen. That's why you should buy these stocks.
Hey, Dick, it's Mike Murphy. I like the banks as you do here, but two of the reasons I like them are less regulation and higher interest rates. But so we're saying the same thing, but you see it coming from a different angle. But I'm wondering, you're starting to see a pickup in the trading businesses, and now we're talking about, after coming off a really weak IPO market in 2016, seeing that thaw out a little bit and pick up in 2017. Can those two things help the banks?
Oh, I think so. I think that it's very definite that we've had a big increase in money supply, and that increase in money supply ultimately was being kept in bank deposits. Now it's being put to work, and as it's being put to work, that stimulates greater trading. We have more currency instability. We have more, questions about long-term interest rates. We have more issues related to where commodity prices are going. All of that increases trading activity, which is another positive.
Well, that's why 20,000 means something as well, because sometimes that excitement around these round numbers gets more people in the market. I want to get your take on these interviews that we had recently. J.P. Morgan Chase CEO Jamie Dimon spoke with me a couple of weeks ago, and Bank of America CEO Brian Moynihan was on the show yesterday. We talked about dividends. Listen to this. Dick, I want to get your reaction.
I've always believed you have a consistent dividend policy. The next thing you really want to do with your capital is invest in the future. If you have opportunities to invest in the future, I'd rather do that than buy back stock.
We've been increasing our dividend, and we've got to go through the CCAR process in the next few weeks in the second quarter, in the early second quarter, and we'd look to keep pushing the capital return to shareholders as part of the thesis of the company. Each year we've increased it. Now we've got to increase it again.
So what should shareholders expect? I'm looking at S&P Capital IQ numbers right here, Dick, and it says that for the fourth quarter, the banks are going to see profit growth in the fourth quarter of 17.7% for the fourth quarter. As expenses go lower and earnings go up, are these guys going to pay out more dividends?
Well, they all are articulating the fact that they want to, but I would key in on what Jamie Dimon said in that snippet that you showed. He said, I would rather invest in the future of the company, the future growth, than put money into stock buybacks. And I think that Brian Moynihan's point of view is incorrect. I don't think that the whole game in banking should be to buy back stock and increase dividends, because all that does is reduce capital, and by reducing capital, it inhibits the ability of the banks to grow. You know, 75 to 80% of the banks that I saw in terms of their fourth quarter earnings, you know, showed these big earnings increases, but their net worth went down. And their net worth went down because interest rates went up so much that it's killing the value of their securities portfolios. So it's not incumbent upon these guys to go out and pay a lot of dividends and buy back stock. It's incumbent upon them to do what Jamie Dimon said, which is invest in the future, invest in all of these opportunities, which I'm convinced are sitting right in front of them right now.
So would you buy the banks at these levels, Dick, after the huge run-up we've seen? Bottom line.
Yes, I've got 75% of the stocks I follow, I've got buy recommendations on, and I've got buy recommendations on because I believe in the Trump economic program, and I believe in what it's going to do for the banking industry.
Dick, good to see you. Thanks very much. Just tweeted out what you said, Dick. A bonanza for the banks coming up. We love you having you, Dick. We will see you soon, sir.